Hello, welcome back to Fund Flows Insight. I'm Jeff Turnahoy. For the week ended February 24th, 2016, we saw widespread, although fairly muted inflows across all the different asset classes and products tracked at Lipper. Let's start off looking at the broad macro groups for mutual fund investors. Again, we saw plus signs everywhere. Equity mutual funds taking in about $200 million, taxable Muni Funds taking in $1.5 billion, municipal debt funds $523 million, and money market funds about $3.5 billion. So overall, it looks like we may have turned a corner in terms of investor sentiment. Again, I can't stress enough how light these flows are. It's as if everybody decided to get back into the game, but not very much, not with both feet at least. When we looked at equity funds, again, $200-some million doesn't really look like a compelling case. But here again, we've seen about 2 out of the last 4 weeks turning positive. So when we look at equity funds here, domestic equity funds, just a scant outflow of $74 million this week is pretty good for them. It's been a long time since they've been able to accumulate net inflows. Non-domestic, just $284 million in inflows. So again, not a whole lot of emphasis here by investors. They're still taking a kind of a slow path back into equity funds, at least this week. Now, last week, we saw the market up about 4.1%, so that may have given investors enough incentive to jump back into it this week. Some of the better areas for investors this week in terms of flows: managed futures funds took in about $483 million this week. MLP funds, maybe sensing that the worst has been found in the energy markets, turned in one of the better weeks inflow data, about $158 million for them. At the other end of the spectrum, still not able to find too many takers this week. Emerging market equity funds had outflows of about $174 million. Not terrible, but still, they're having a tough time. Next group to take a look at is equity ETFs. Now, they were the one holdout that could not find inflows this week. About $515 million drained out of equity ETFs. Now, where was the action this week? It was all about gold. Gold short bias funds, and similar to the mutual fund side, energy MLP funds also had inflows this week. On the outflow side, and S&P 500, financials, here's a Japanese equity fund that also had outflows. So overall, when we're looking at the outflows this week, the worst was from SPY, not surprisingly, about $3.2 billion pulled from SPY. Other areas like QQQ and DXJ, as we pointed out, also had outflows, about $600 million each for them. On the plus side, we saw Spider Gold take in a whopping $2 billion this week, a very good week for them. Best they've had in a long time, as investors have noticed that the price of gold keeps going up. It's up about 16% year to date, so not surprisingly, investors on the ETF side have started to take notice. We also saw some minimum volatility ETFs take in some decent flows as well. Well, let's turn our attention now to taxable bond funds. Again, $1.5 billion in inflows for them. It's pretty good. Now, 2 out of the past 4 weeks have been positive in the market, so no surprise that investors are still standing by taxable bond funds pretty well this week. In fact, 4 out of the last 5 weeks have been good performance. 2 out of the last 4 have been positive inflows. So starting to build a little bit more momentum for this group. Investors got very excited about high yield, probably related to the upsurge in, as we saw in some of the energy and MLP equity names. This interest has, again, brought in about $1.5 billion to high yield funds. Now, on the other side, the ones that still haven't been able to find any ground, loan participation funds, continue to bleed assets, about $526 million pulled from them this week. Well, the more actively traded side, the taxable ETFs, saw pretty good inflows this week. Call it $3.6 billion, one of the better weeks we've seen recently on taxable bond ETFs. Name of the game, similar to the mutual fund side, was high yield. Again, solid inflows here. HYG and JNK combined for about $1.3 billion in inflows. When we're looking at the rest of the taxable bond ETF market, we didn't see too many names with sizable outflows. In other words, pretty light everywhere else. Again, the story was all about high yield and not much else. Now, the next group to take a look at is municipal debt Mutual funds, again, $523 million in inflows this week. Pretty good. This comes after 2 negative weeks of performance. So investors are really showing a lot of composure in the face of a soft market. Looking at some of the common benchmarks, the 10-year Treasury saw its yield go from 181 basis points to 175. So that should have supported a little more bid in the muni market. We didn't see that follow through, though. When we're looking at some of the major muni indexes like the Bond Buyer 40, from Wednesday to Wednesday, the yield on that product drifted around slightly, going from 404 basis points to 405 basis points. Really not much of a change over the course of a week. The next group to take a look at is money market funds. As we wrap things up with money market funds, we know that they had about $3.5 billion in inflows. Really not much to speak of here. Retail investors pulled about $100 million net, which wasn't much. Institutions added 3.6. Now, if we break this down into some finer categories, we see tax-exempt money market funds with about $2.5 billion in outflows. Prime money market funds with outflows of $1.5 billion. And then government and treasury seeing inflows of about $7.5 billion. So once you scratch the surface, you see some very different results for flows in money markets this week. Well, that'll wrap it up for this week's flows activity. As always, you can join us online at lipperusfundflows.com or catch us here next week as another analyst will dissect the inflows and outflows of mutual funds and ETFs. Thanks for watching.